Good afternoon, friends. I'm Jyoti Malhotra, and I'm the host for the afternoon, and I'll be moderating the discussion and the webinar. The topic is a very topic which is a lot discussed, decoding the union budget, and our focus will be on the automotive and manufacturing sector. This is brought to you by Grant Thornton, and it's supported by the Society of Indian Automobile Manufacturers. For this webinar, we've got a very distinguished panel with us, and I'll introduce the panelists to you. Among the first is Mr. Ajay Seth. He is the CFO of Maruti Suzuki. If I have to say that when did he's got years of experience, and I would only say that he started his professional career before Kapil Dev won the World Cup for India. So that shows how rich his experience is. He's been the CFO of Maruti Suzuki for the last 15 years, and he's been, to a large measure, also responsible for shaping the destiny of the company. His focus is on digitization and corporate governance. We have Mr. Rajesh Menon, Director General of Society of Indian Automobile Manufacturers. This is an association which represents the top 40 OEMs of the country. Mr. Rajesh Menon, before serving as the Director General of SIAM, was also the Deputy Director General of Confederation of Indian Industry. He's a person who plays a very pivotal role in facilitating the policies of the government, and he interacts also. He's doing a lot of initiatives taking to make India as a manufacturing hub and investment hub. So that's Mr. Rakesh Menon to you. We have the next panelist is Mr. Sunil Bora. He is the CFO of Uno Minda Group. Well, I call him a very multifaceted personality because his experience runs from oil and gas, minerals and metals, consumer products, optic fibers, and last not the least, auto industry. So that's Mr. Sunil Bora. Now we have also Mr. Jyoti Malhotra, who's the Managing Director of Volvo Car India. Mr. Jyoti Malhotra is got about 25 years of experience in the Indian auto industry, and he's worked across functions, across regions in the auto industry. And if I have to say, in 2 decades, he started as area sales manager, he's moved up to the managing director. So if I were to use an adage from log cabin to White House, that's the way I look at it. And he's got the distinction of being the first managing director of the Swedish multinational in India. So that's Mr. Jyoti Malhotra. And last but not the least is Mr. Saket Mehra. He's a partner in the automotive sector and the partner and automotive sector leader in Grant Thornton. He comes with a lot of rich experience, and his focus areas has been enterprise risk management, corporate governance, risk management, and also cross-border advisory, because a lot of MNCs and other companies come to India, and he's got a special focus on supply chain. So before we start the topic, I'd just like to give you the contours of the auto industry. If you look at the auto industry, it contributes 7% of India's GDP. It contributes about 35% of manufacturing GDP, and it employs about, hold your breath, it's true, 35 million people directly or indirectly in the country. So in a way, it will be the largest employer. Around 35 million, about 10 million will be direct and 25 million will be indirect. But if you have to look at the auto ecosystem, what does it entail? Manufacturers, OEMs are one side, which may be about 50 to 60 in the country. Auto ancillaries runs in hundreds. That's represented by ACMA, hundreds across the country, across various locations. Then you have a new focus area, design and development centers coming into the country, not only for players who are already present in India, but even of companies which don't have a presence. And then you have the dealers, which are spread across all the 750 districts of the country. I mean, in rural areas, it would be even more deeper to tehsil if we take companies like for the two-wheelers. And then you have the large ecosystem, whether it's transportation, public transportation, logistics, taxis, you name it. It's a very large ecosystem, repair workshops beyond the dealers. So there's a saying that auto industry, especially in India, is a reflection of the Indian economy. It won't be wrong to say if the auto industry sneezes, the probability of the Indian economy catching cold is high, and vice versa. So that's the size, the complexity, and the nuances of the industry. And we will start right away. What we'll expect our audience is any questions you have as the panel discussion proceeds, you can post it on the chat box and we'll answer it at the end of the session. And from the beginning, I request Mr. Rajesh Menon to give his keynote address and share his perspective on the budget just declared yesterday. Over to Mr. Rajesh Menon.
Thank you, Mr. Malhotra. Thank you very much. It's indeed a pleasure to participate in this panel discussion and also partner Grant Thornton for this very important analysis of the union budget, which was presented yesterday. So I will just position my remarks in two elements. One, of course, is the overall macro highlights of the budget and which has got implications on the auto sector. And second, subsequently, I'll talk about specific references to numbers and any other measures which Honorable Finance Minister announced in the budget yesterday. So first, on the macro part, very clearly, we from the industry perspective, it was a growth-oriented budget, which focused on building long-term strength using investment as a growth lever, while maintaining policy stability and inclusivity. The 35% increase capex outlay, major infrastructure projects like 25,000 kilometer road construction, 100 cargo terminals, Project Gati Shakti, 5G network, optic fiber cable laying, and the recent PLI schemes, which was also referred to, but it was announced for auto sector earlier. They are very major positives from the budget. There was also reference to leveraging biomass and support to ethanol blending for both environment and economy gains, which obviously will directly impact and unlock the power of India's rural economy. Anti-dumping duties on certain steel products has been removed, which will also help the entire manufacturing sector. And there was also impetus to charging infrastructure and energy storage systems and government support in R&D for clean energy, green mobility, and semiconductors. All this will have a direct implication for the auto sector. Coming to specifics in the budget with reference to the auto sector, one is definition of CKDs of electric vehicles has been amended. And the rates remain the same, but it has been made much more clearer. This was one of our SIAM's recommendations on which we had engagements with the government. And this is much more clearer in the notification which has been issued in the budget, in the finance bill. Second, there's an announcement of extension of 1 year to 1st April 2014 for starting of operations for the new manufacturing companies for reduced corporate tax. This would provide major support to the industry who are looking at new investments. This is also one of our SAM recommendations on which we've had interaction with the Minister of Finance. So we have now a 1 year extension to 1st April 2024. The third is there was a mention that government has intended to minimize legislations by committing that the new appeals where there's a question of law would be deferred for identical issues which are pending in High Courts and Supreme Court. This will also help and benefit the automobile sector. Fourth, we noted that in the budgetary estimates, 2,908 crore, 2,908 crore has been allocated for the FAME scheme compared to 800 crore plus, which was spent last year. So that's a major increase, which has been allocated for the FAME scheme for the upcoming year. Also, 2,057 crore has been allocated towards procurement of medium and heavy vehicles by defense, which will also benefit especially the component industry, the supplier industry. There was a reference in the Honorable Finance Minister's speech on green mobility, on battery swapping policy, on special mobility zones. So this emphasis is very important, and we as from the industry perspective, from the SIAM, would need to analyze this, study this, engage with the government on this in more detail to understand exactly how this policy will come out. And there was also a reference of higher excise duty on non-blended fuel from 1st October 2022, which probably could impact the retail price of diesel in many areas, as diesel may not be blended with biodiesel. So we'll have to see how this thing will work out. So this is broadly on specifics vis-a-vis the budget. But as I'm sure everybody is aware of, we also had last few months three major announcements of one was a scrappage policy. Then there was an announcement of the PLI scheme for auto and auto components, and also PLI scheme for ACC, advanced cell chemistry. So all this interventions, announcements of the government is of immense benefit to auto industry, and I'm sure industry will leverage these announcements and will grow much faster and will contribute more and more as we move towards the next phase of growth. Thank you, Mr. Malhotra.
Thank you, Mr. Rajesh Menon. You clearly emphasize that a lot of initiatives are taken which don't look directly connected with the auto industry, but will have an impact, or I would say a favorable impact to the auto industry are visible. There are certain initiatives which will impact the industry, whether in terms of setting up India as a manufacturing hub. And I think one thing we should mention is a lot of key policy decisions had been announced before the budget itself, whether it's a scrappage policy, whether the production link incentive scheme, whether it's for the advanced chemistry, also the production link. Coming to you, Mr. Ajay Seth, you heard Mr. Rajesh Menon and you got your perspective, and you're the largest passenger vehicle manufacturer of the country. Anyway, the Maruti breeds across districts, SEs. How do you see it from the OEM side and from the customer side? How do you see as the budget?
Thank you, Arun, and thank you for having me for this panel. Many years ago, we used to have just the union budget, which was virtually for all the policy decisions and the finance budget, which was declared. But now there are so many action points during the year where you have policy interventions across the year that you have a series of events that are happening, and this is one of the events that you come across, but an important event nonetheless. I think a lot of it has been echoed by Rajesh in his earliest talk. I will just like to emphasize that obviously it's a growth-oriented budget and it's aimed at improving infra and promoting capital expenditure. The focus that they're putting in on rail, road, logistics, etc., is something which is well received by everybody. This will help in economic growth, create employment, and also help improve productivity, which is very important. A lot of productivity laws that we have today is on account of lack of infrastructure. It's also good to see that government is spending money usefully. The increase in capital expenditure will do eventually good to the country. So the spend that is going on capital expenditure is fruitful expenditure, and it's not on things like subsidies. In fact, subsidies have actually been cut in the budget, which is also encouraging. The other important thing is that government has kept also a close watch on the fiscal thing, at 6.9%, and having a plan to reduce it to 5% over a few years is a step in the right direction towards fiscal prudence. So this is also well received. Various PLI schemes that have been announced in various sectors will promote Make in India and also create massive job opportunities and boost manufacturing, because ultimately job creation, boost in manufacturing, all this, has an impact in improving consumption across sectors. GDP growth targets of about 8 to 8.5% next year will also see some uptick in economic activity, and therefore you will see consumption going up in the year 22, 23 in the budget year. As you know, auto sector has been badly affected in the past 3 years. First, due to regulatory changes, and then pandemic, and then we had this problem of supply shortages because of semiconductors. We are still far away from the peak that we saw in 18-19, and hopefully this sector should look up this year with all these measures that we see, and hopefully if the pandemic is behind us, or it does not impact the business as it has impacted in the past 2 years. FM also mentioned about the battery swapping policy, the mobility zones, the energy storage, etc., which I think is fantastic for the ecosystem for EVs eventually, and we will see how it pans out as we go along. As per the commitment to carbon neutrality, the government is focused on driving clean energy by laying out incentive schemes to different sectors, which is also welcome, because ultimately, I think this is a very important topic which everybody is clearly talking about, and we have to move to zero carbon at some point in time. India is committed to in 2070 to move to zero carbon. Support has also been provided to farmers through minimum support price, boost to agri-tech companies, promotion of digitized technology in crop assessments, etc. I think this is an important, and also we talked about blending of ethanol, etc. This will help in boosting the rural economy, and for us it is very important that if rural economy grows, the consumption in rural economy goes up, and therefore you will see demand surging in that economy, and this is an important piece for automobile industry as well. FM also extended the date for setting up of new domestic manufacturing facilities, which will attract lower tax rate by 1 more year from March 23 to March 24. Good for companies who are setting up who have expansion plans and who want to set up new factories. If they have now 1 more year to set up because things got delayed because of COVID, so they will get some respite. The other important thing is, setting up these emergency credit line guarantee schemes for MSMEs in hospitality and other related sectors will also help get these sectors which have been very badly affected because of pandemic to come out of it slowly and steadily, and keep them afloat rather than some of these micro industries dying. So broadly, this is the take on the sector. Some of the things that we thought could have also been addressed in the budget. You always have your wish list very long, but some of the things that we wanted the budget to address. One was, of course, some change in the tax slab rates, which also gives more disposable income to individuals and hence boost consumption. But government has its compulsions of tax collection, so they did not tinker the tax rates at all. The second important thing which we thought was missing in the budget was non-inclusion of the global bond index. We were very hopeful, given the fact that the bond yields are now hardening, given the increase in borrowings for the government, that government is going to include the global bond index in Indian bond market, and get some major inflow of some $30-odd billion to cool off the market, the interest rates. But this has not happened. Maybe this announcement may come later, but we are hopeful that this will be an important step in cooling down the bond yields in the market, which is important for the growth of the economy as well. There has been no mention of investment-oriented tax benefits. We are hopeful that research and development being a very important activity. This benefit was taken away by the government some time back, but we think that India still lacks R&D, and there's a lot of focus required on R&D, and therefore, till we reach a level of maturity in R&D, we should continue with benefits or SOPs where companies are investing heavily into research and development. And lastly, we have been waiting for clarity on the equalization levy, where there was a lot of ambiguity in terms of how this is panning out, and there were various representations made via SIAM and otherwise, but we have still not got that clarity. So we were hoping that maybe in the budget we'll have some clarity, but let's see how it pans out. So these were some of our wish lists which we thought could have been addressed, but have not been addressed. So that's all from me. Thank you.
So thanks, Ajay. Very comprehensive. You rightly mentioned that the government is not talking of which is less legislation and less doles, but more focus on initiatives, more focus on investment, more focus on performance and innovation. And you said a lot of expenditures, which whether it's in terms of capital expenditure, road infrastructure, will help the industry. But you also highlighted, I mean, at the end of your talk, certain areas which could have been touched and which are still unfulfilled. So, Mr. Menon, there's a new task ahead for you as the Director General of SIAM, which Ajay Seth has given to you. There are certain points, but I think overall what I'm getting a feel from Ajay is that overall it's a positive budget. And if rural economy picks up, and if the overall market picks up, the sentiment picks up, which is evident somewhere in the last 2 days, even in the stock market, it augurs well, because sentiment is a very strong growing ground as far as concerned. And one thing which I cannot at all disagree with him and totally agree with him is a focus on R&D, because if India has to become a manufacturing hub, R&D hub is an important part. So thanks. Over to you, Sunil. Sir, one of the things which government, a lot of people are saying that all the government initiatives which happened in the last 6 months, whether it's a production-linked incentive scheme, whether it's for the advanced chemistry materials which is there, whether it is that 1+1 policy of China focusing that how we increase our manufacturing, this thing is all a plus point for the auto ancillary industry. That's why the auto industry growth this year has been much higher than the auto industry growth. So a lot of people say, why is it higher? Because the potential for exports, the potential for outsourcing is high. So do you think this budget or the actions taken, does it help you to move to the next level? From that 5-6% of the world's contribution in auto ancillary to the next level? Is it a stepping board, and is the industry ready to take the bait?
Yeah. So thank you, Arunji, and good afternoon, everyone. And thanks for this opportunity to share our views. And it's really good to see government extending the earlier policies and not changing dramatically. It actually gives a lot of stability to policies and the industry while taking decisions, because you don't want actually policies to change year on year. So that's a very big, I would say, a positive step, that there are no, I would say, surprises to that extent. And while a lot has already been shared by Mr. Menon and Mr. Sheth, before I go into your specific question whether industry is excited or not, I think let me try and share my views, and I'll try and avoid repetition if any. But my apology if there is because that I might share some of my views on some decisions which has been announced by the government and which may impact our industry. So to start with, I think I completely agree with Mr. Menon, as he mentioned, that budget is definitely growth-oriented budget with a significant impetus on capital expenditure to fuel the economic growth and employment generation, and taking India from 75 to 100. I think we heard about it, that India at 100, right? So with that thought in mind and creating a sustained lever for growth, the FM has allocated almost 7.5 lakh crores for capex, which is more than 2.5 times, roughly 2.2 times compared to what it was 2 years back. And also there is a lot of focus on building infrastructure for inland waterways, cargo terminals, Gati Shakti trains, etc. Such capital expenditure, if executed as intended, I'm sure it will help reviving the economy through higher investments amid disruption from the pandemic and rising inflation. From auto industry perspective, the move would definitely have a positive impact on various segments, and construction equipment industry specifically will benefit from the overall growth of the economy. And this will have a spiraling effect, as you mentioned initially, that if auto industry sneezes, the economy gets colds or vice versa. So if economy gets a boost, I'm sure auto industry will have a positive flip there. The budget also announced developments on the infrastructural front, stating that almost 25,000 kilometers of national highways to be expanded in 2023. This move again is very positive and will also have a long-term impact on the vehicle ownership across the country. Government also has focused significantly on climate change, I think, as spoken by Mr. Sheth also. And hence that almost 20,000 crore of allocation for PLI for manufacturing the high efficiency solar modules. And this is a big step towards that, creating 280 gigawatt of green energy by 2030. So this definitely would create a new age infrastructure for green energy and EV ecology over the next decade. We believe that renewable energy and EV ecology would be themes of the next decade. The government said, and I think it was also touched earlier, that it would frame a battery swapping policy and introducing energy as a service. I think it's a good concept to hear. Let's see how it gets implemented, but definitely this will help mitigate one of the biggest hindrances to adoption of EV in India, about range and charging anxiety. The move definitely is intended to facilitate transition to EV, wherein this again is one more policy in addition to FAME, as earlier also was touched upon, wherein once it will bring down the battery cost, etc. We believe initially maybe few segments like two-wheeler or three-wheeler may lead and see exponential growth in coming years, and others also to follow soon. We all know that auto component sector is dominated by MSMEs, and the extension of the emergency credit line guarantee scheme for MSMEs by 1 more year, and also extended cover by another 50,000 crore, definitely will address a wider issue of credit flows to small businesses. The scheme has provided immediate relief to small enterprises. I think on defense procurement, we have seen the budget has increased the domestic procurement in terms of capex almost 68% to 58%, which was earlier. This definitely will create another opportunity for auto component sector. We'll see how this pans out. Budget also has focused heavily on integrating technology across sectors, and gradual acceptance of digital currency, blockchain, virtual digital assets is moved towards making India digital. In fact, we see there is a lot of focus on digital India in most of the initiatives and schemes. If you would have heard the speech yesterday, there was digital, I'm sure somebody would have counted, would have been happened, spelled out multiple times by the Honorable FM. There was also a mention of removing overlapping of compliances. That's a welcome step. And all these will also help in ease of doing business. I presume faster approvals and fix, more importantly, accountabilities in the system. Now, I think what can be better, and I echo what Mr. Sheth has also mentioned. One of our expectation also has been around R&D, and there is serious need to encourage R&D and innovation to bridge the gap with respect to other economies. And this will also be a major step towards the Atmanirbhar Bharat, which is the theme government has been sort of working on last few years. and will help the domestic innovation to come at the front. Some other initiatives I would say is the road tax scheme. We all know that MEIS earlier scheme has been replaced by road tax scheme, the remission of duties, taxes, etc. These rates actually are significantly below the rates computed and submitted by the auto industry, thereby compromising the export competitiveness of the sector. The effective rate of road tax rebate on some category of components are not sufficient to meet the unrebated taxes, duties on expenses which are incurred directly on the vehicles, such as reverse fuel component and fuel used in production on and testing of the vehicle. Better road tax rates definitely will help Indian automotive sector to restore its export competitiveness. So there was an expectation that these rates will be sort of increase something. Let us see if it is done outside of the policy. But I think that was one of the other expectation where we were hoping there will be some announcement, but unfortunately there was none. But overall, I think, as I said earlier, I firmly believe that this budget is going to be a game changer for the country for next few years, because the capex cycle, if government starts on back of it, I'm sure every industry, anybody who is sort of doing business will have to invest and do its own capex. So it's a multiplier effect which once starts, I'm sure it will create a significant growth in the medium to long term. And I'm really happy that government chose, despite a lot of elections around the corner, not to have a populist budget, but to bite the bullet and take some bold decisions. And I think that's what is visible. So I think overall that's our view. Thank you.
So one last point which Sunil mentioned was that political expediency has not taken precedence over good business decisions, which used to take. So that's a positive point which he said. The second point, which I think he refers to clearly, is the potential is very high, and the MSMEs which had been struggling will improve. But I'll come to you, Jyoti. Jyoti, I think to one point which Ajay mentioned in passing, and that's very critical, we may go gaga that the growth is there, demand is there, waiting is there. But looking at our industry size, looking at the numbers we are doing this year, even are somewhat what we had done 3 years back. So effectively, the growth in the auto industry, whether the three things which Ajay mentioned, whether it was due to too much over legislation, or whether it was due to pandemic, and now whether it's due to supply chain issues, especially on semiconductors. So is there a point, can we move to that big jump? Because a 7, 8, 10, 12% jump is nothing, it's just catching up. That's the first part. You have an unenviable task since a lot of points and data has been thrown by the panelists before you. So probably a lot of points have taken over. So one is that perspective. Second, you represent a multinational who want to invest in India. Look at from their perspective. Do you think enough has been done to expand the market, especially in products like your luxury cars, and also in terms of these companies coming and setting up design developments and centers and manufacturing hubs? Because you still, please, I was talking to somebody, they said, we may go gaga over it, but Thailand, like a country like Thailand, does better exports than automobile. So which is not a great reflection. We may say China, but Thailand is also there.
Yeah.
So from your perspective, Jyoti.
Yeah, so I think as we heard from everyone, I think now budget has become one important event, but I think there is a continuity of information that we keep getting from policy. But one thing I want to say here is that sometimes having no news is a good news, which basically indicates stability and continuity. So I think as somebody representing a MNC, I think that is very, very crucial. If India really wants to become a manufacturing hub, stability of policy, continuity of policy is very, very critical. And unfortunately, I think India is a bit negative when it comes to something like that, because sometimes policy decisions can change very fast. But I think this time, and I think the stability is very good. And as we say in cricket, I think we didn't have any bouncers or any googlies coming our way. And I think this is very important. I think for us to also take our case back to our headquarters for investment is absolutely very, very critical. And I really welcome, I think, the stability and continuity on all prospects. And secondly, I would like to say, from a direction perspective, this is a very, I think, a growth-oriented budget, I would say, with a long-term vision that came out very clearly. Here, the government is talking about, let's say, moving from fossil fuels to solar energy. and they have set aside big budget for that, moving to 280 gigawatt power, because there is a lot of discussion that over a period of time we have to move towards EVs. But as we all know, the car alone is not a silver bullet that, okay, we'll have EVs and I think this will bring sustainability. I think there has to be much more things, the way these cars needs to be charged. The fuel that will bring this energy is very critical. So hence, I think that is another very positive thing. And in this budget, very clearly this came out. There were clear mention about climate action. There were clear mention about alternative energy. So these are all very welcome things, because again, representing MNCs, for us, sustainability targets are very, very critical. And when we see on these, it is not just about the product, but a larger ecosystem which is in place. And I think, and what I think Sunil also touched upon this, PLI, while we have a lot of PLIs in place, I think for automotive and components, and on top of it now there is this PLI which has come for high density for solar panel, is again something which will boost confidence in India, and also boost, I think, manufacturing in that segment, and also boost our direction in moving in the direction where we can think of investing more in India. So I think, and there are other things which I think I don't want to repeat, whether it was, I think, focus on roads or infrastructure, logistics. I think these all will have its own trickle down effect. So I think what I would like to say is, I think this budget, I would say, is progressive, is stable, and boosts confidence when it comes to setting up manufacturing sort of ecosystem here in India. Back to our headquarters, I think gives a very positive signal when we don't go back with any surprises.
So Jyoti can go back to his headquarters and speak slightly positively that they should invest in India. That's a very positive sign. And as you said, sometimes...
Exactly. And I think, as we heard, I think now the clarity on CKD for EVs is also a welcome step, because that also is a good story.
That wasn't somehow came out much in the news in the perspective we got missed out, but that's a very important thing, which is part of it. And so, you know, what you said was the bouncers, the beamers and the googlies were not there, which probably the Indians faced a lot in South Africa and they lost badly. It was a more flat paying field, and there is a lot of progressive things. And there's a consistency and continuity. Because I remember in the olden days, every year it used to revise, sometimes ground clearance, sometimes length, sometimes this diesel, sometimes this surcharge. So you people used to keep juggling. So a lot of focus of companies used to happen in juggling or jugaad rather than real innovation. And they could not put long-term plans. So that was a point which you said clearly. And sustainability, which is a question which is a lot of people are asked. So it's the government is putting its best foot forward. Coming to you, Saket, you know, you work with a lot of companies across the board. I mean, both in the field of audit, also in the field of advisory, in the investments, both Indian companies based in India, multinationals based in India, and multinationals who want to come to India. And there is always an element of corporate governance, risk, and other things which keep coming up, or legislations which can stall the projects. A lot of people, there's some legislation, backdated legislations. How do you see this budget? And when you talk to your clients or when you talk to your counterparts across the globe, what is the message you get after this budget?
Sure. Thank you, Arunji, for this question. I think I would first of all agree with all the co-panelists, in terms of the budget outline, which has come out very clearly. And if you ask me, I think over the last 2 years, it's been a tough situation for everyone, for all the countries rather. And I think the way the government has been able to manage few of the macroeconomic fundamentals, there are very exceptional, I would say, work which has been done by the government. But I think overall, if you look at over the last few months, there are larger economic indicators which have been indicating towards optimism, a general optimism in the business environment. Whether you talk about the tax collections, the GST collections, in fact, the Honorable Finance Minister also talked about the healthy collections that we had in the month of January. Or you look at the results which the roughly 300 odd companies have posted for the third quarter. Or you look at the private equity investments which have come in over the years. So there is a general optimism which is being there, which even the investors globally or the companies globally have been kind of accepting the fact. But I think three things which clearly stood out, before I answer your question, Arun, in terms of what are the risks which the investors are looking at. Three things which clearly stood out. One was the digital bend with which the government is moving. I think it's very clear that yes, government wants to create some kind of a seamless platform for interaction with the citizens. So what it means, that today, if there is a student who is eligible for a scholarship, instead of that student going out and figuring out what is a scholarship eligible to him or to her, the government wants to interact with those students directly. And this would happen across education, across healthcare, across any other sector that you talk about. The economic survey also pointed out to the fact that since the time the government launched this e-marketplace for procuring the services, there has been a reduction of almost 15% in the overall cost for the government. So what it means is that with these projects like the Bharat Mala projects, etc., which aim to provide internet bandwidth access to all the pin codes in India, there is a lot of emphasis on digitization. And this could very well be related to our auto industry as well, because that's what we have seen over the last 2 years, whether it's an end consumer or it's the OEM focusing more on the digitization. That's the first aspect. The second one is on the education. So if you look at, there again has been a significant jump in the education outlay. And what the government aims to bring out is something like an affordable, accessible education to everyone in the system. And the foreign universities, when they can now offer the courses over here in India through the gift within the gift city, I think that's again a very welcome move for us to look at Padega India, Tabhi to Badega India. So I think these two things very clearly stood out for me, apart from all the mega announcements around the heavy capital expenditure, which will boost the infrastructure side, etc. Now, from a global risk standpoint, Arun, if you look at the IMF also projects a growth of 3% for the world in FY23. And it's certainly impacted by the factors like the global inflation, or whether it is the supply chain constraints or the commodity pricing increasing, etc. But if you look at the World Economic Survey report on the global risk, there are two important things which this survey talks about, which is the climate action failure, and second is the widening of the skill and the education gap. And this is happening because still there are almost 50 odd countries where the vaccination rate is less than 6%. So over the period of time, what will happen is that this gap will keep on widening, and which potentially might lead to a risk of migration also. The other thing from an industry standpoint, if I were to talk about, Arun, is the economic survey projects or gives a growth rate of around 8.5%, but it takes into consideration certain assumptions. It takes into consideration the assumption of the oil being around, say, $75 a barrel. Now that is very volatile, as we all know. Like it was rolling around, say, $20 some couple of months back. Now it is around 80, 90. So looking at the geopolitical tensions which are currently existing between the European nations and the Middle East nations, I think oil is going to play a very significant role for us to really achieve the growth targets that we have set for ourselves. And India is no different, because our oil bill has been increasing month on month. I think this year we would be closing more than $100 billion of oil imports. And precisely we'll be going back to the level of 1890. So that's one significant risk which we need to be bothered about. The second is from a point of view of the current account deficit. Now, for example, let's look at the automobile industry. We imported auto components, in the first 6 months of the current financial year, roughly to the tune of $8 to $9 billion. Now, obviously, there is a pressure on the currency. Why? Because the oil prices are going up, the freight rates have gone up, the container availability is becoming a challenge, the waiting time at the ports has gone up. So there is an inherent cost which is getting built up, which always may not be passed on to the customer. So that's the other risk that we are sitting on. And the third is the rupee weakening further, possibly. And this is all because, as Mr. Seth also pointed out, the US tightening its policy. A lot of Indian companies who raised overseas debt many years ago, there is a maturity which is falling due over the next 12 months. So that will put some kind of a pressure on the currency. There are Indian companies who were wanting to raise debt overseas, but have held back that decision only because of this current volatility which is existing. So I think these are the few risks which we need to be mindful, while we work with our customers in India as well as outside.
So Saket, if I have to take a political line and convert it to a business line, there used to be a line that eternal vigilance is the price of liberty. So for growth, eternal vigilance and eternal focus and eternal action will help us there. And you said this gap of skilling, which is there, not only numbers, it's question of quality of skilling and relevant industry. And then the oil prices and the current account deficit, these need to be kept in mind. So it shouldn't happen that you get into a challenge. We're coming to the last part, second part of discussion. And here I would like to focus on, there's a saying that there are a lot of announcements and pronouncements, but the proof of pudding is in the eating. When we were in school or when we were in 11th class, we used to learn a formula in physics called I square R, square of the current into the resistance, which was transmission losses. We are notorious for transmission losses or delays. So Ajay, coming to you, there are a lot of things. There's scrappage policy. There is a policy related to PLI. There is a policy related to various things, highways. What are 2-3 things which the radar or there should be a focus on that this should happen? These are the enablers. Otherwise, all these good intentions I'm not saying will dissipate, but can get delayed. And as the saying goes, justice delayed is justice denied. So for Ajay, from looking at your experience, what you've done, what you've committed, how do you do it faster? Like somebody has asked just a question that, sir, we heard of the scrappage policy. What is the status today? I mean, I'm just talking a question which I just saw. So that's from your perspective. So 2-3 key points. If you would like to give an advice or input.
So I think the intent of the government is very clear in terms of growth. See, the kind of bet they have taken of a higher fiscal deficit is only with relation to growth. So if the economy does not grow, we'll be in serious trouble. So I think one thing is very clear, that while during the pandemic, with all the solves that were given, we went into a higher fiscal deficit. The only equation to that, equality to that is growth. So if you don't grow, you have a problem. So I think the government will go all out in terms of promoting various actions required for growth for the industry as a whole. As far as automobile industry is concerned, as I mentioned to you, we have been behind because we have not grown really in the last 3 years. We have degrown actually. So all the actions that have happened now in the recent past, whether it's linked to PLI schemes or scrappage policy, or the other actions that government has taken, semiconductor incentive PLI schemes, all this I think are enablers for the near future in terms of how the industry will grow. I'm reasonably sure that if the economic activity picks up in 22-23, and the income level starts rising again, there will be consumption will be back. Even now, we don't see so much of a demand side problem as far as the four-wheelers are concerned as supply side. But hopefully, with all the actions that government has now kind of demonstrated, and if they execute everything fast and as per what they have decided, and we have the supply side also now reacting to the change that's required for the next year, I think things will improve. So to put it in perspective, we really want the execution of the actions that have been said by the government to be faster and on the ground, and then kind of relate to what we're looking forward to.
So Ajay, just one line I need to answer from you. Do you think there is a good working coordination to see that the execution quality is up to the mark? Or is it a linear flow?
No, I think it's changing now. There is a lot of coordination between industry and the government in terms of various actions that are being taken. Rajesh can also articulate that point well, because a lot of action is done to the trade bodies, and we've kind of been heard in terms of policies and so on and so forth. The only thing that I want perspective that I want to put in is that we are still not, the automobile industry is still way behind in terms of growth. So if it was a normal situation, we should have been an industry of about over 5 million or maybe close to 6 million by now. We are still an industry of about 3.5 million or thereabouts. So we are, about 2 million behind in the last 3 years, and then we have to make up that ground and then grow thereafter. So you can imagine the kind of potential that the industry has, but it needs a lot of intervention and action, both from the OEM side and from the government side.
So, very well said. You said it's like a cricket match when first innings lead has been substantial by the other team. You don't only have to do well, you have to do so well that you to make up the deficit also of the last 2-3 years, which has happened, which the industry has not grown. So they say a desperate situation requires desperate remedies. Coming to Mr. Sunil Bora, there's a saying, and the government says it, and it's relevant with Abraham Lincoln said it, don't ask what the country can do for you. Ask what you can do for the country. So keeping that in mind, just I want you to highlight 2 things which you think industry should do and 2 things government should do to implement faster and to have a better quality implementation.
Right. So definitely what industry can do is a lot on innovation, as it was also mentioned by Saket that there are a lot of still import of auto components. So if I see as a auto component industry representative, definitely there are a lot of things which you can do. But again, it all boils down to your own R&D. I think of late, the companies have started investing a lot in R&D, which was not the case. So a year before, there used to be a policy where you used to get indexed deduction on your R&D investments. So a lot of companies have innovated, right? A lot of companies, if you see in the history of last few years, while the imports remain at the number which Saket spoke, but it has actually come out significantly what it was 5 years back. That again was backed by government support through the tax reduction for R&D. Now that is not there today. So what's happening is today we might be as an industry milking the benefits of the investments which you have done in past, or there are companies who might be doing R&D. But if you see the auto component sector per se, it is loaded with primarily MSME industry. Now that MSME sector, the mindset is mostly, which I believe is towards manufacturing, towards excellence, towards making your operations nimble, smooth, you cut costs so that you are competitive. In that scenario, to invest in R&D, right, it's not an easy decision for an entrepreneur. And where we know there are hundreds and thousands of entrepreneurs, which are primarily in not even MSME, it's micro, medium, and small. It is primarily micro and small. Even medium and large are very few. So while the larger ones like us might be investing a lot in R&D, I think we have a lot of road to cover in that aspect. That's now what government can do for us. Definitely, as I said, how do we make this innovation aspect sort of driven very, very rigorously in the industry? Now, unless you innovate, unless you put money behind R&D, because the moment you put money in R&D, your returns are normally 5 years, 10 years hence. Whereas the mindset today is, I invest money today, I should get my return in 5 years, 7 years, 8 years, right?
Okay.
So that kind of support from government, if it comes, I'm sure it can actually help industry a lot by making self-dependent, innovate more, and also it will have a cyclical impact in terms that it will not only cut imports, you can actually be exporting a lot of those components also and be competitive.
So, Sunil, what I'm hearing from you is clearly, and this is a point which was said by Ajay even, and you also reinforced it, that unless you do something very unique in R&D, and this is, the ball is in the court of both the companies even and also in the government, then you're not investing for the future. And the base of manufacturing will be built on design, development, and R&D. If that is somewhere weak, your export, your competitiveness, your import substitution, your export is a challenge. So R&D focus has to come in. And could be probably, Mr. Rajesh, and there's a point for you that probably a lot of government initiatives do come in the middle of the year. Probably that's a point which is still pending because you need a major focus on R&D from a perspective. Jyoti, from your point of view, you looked at this market for a long time and you looked at it from different angles, rural, urban, now you're in luxury cars. What is something to be done which will drive immediate demand? I mean, it's all good to say that 5 years later will be this, 5 trillion, 2070, 2080. I mean, you can keep saying. What are the 2-3 things which you think are already there, which need to be focused on to drive demand in the short and medium run?
Yeah, so I think first and foremost, I think as you said earlier, I think there is, as an industry, we need to cover the deficit first and go back on a growth path. I think that is very, very important. And there are certain things that are required for that growth to come back. And I would say, since we're talking in context of this budget was more about capex. I think we have heard, I think so much of
Capex. Yeah,
money has been
absolutely.
given. My view is, I think one way this can be addressed is where if we can front end the capex. See, we can have all capex spent towards end of the year because sometimes someone is working to meet those targets. But front ending the capex expenditure now can have a trickle down effect, so that I think by the time we are towards our festive season, we can see the trickle down, and I think that can promote growth. Is the way I see it within this context of this budget. But there are a lot of other things which is outside this context and which can also be done. But I think this thing alone can definitely have a positive impact on and bring back growth for the industry.
So, a very interesting term, Jyoti, you coined. You're not an economist, but front-ending capex. So, interesting term for economists to think of it. Because capex generally one assumes is slightly more medium to long term. But as you rightly said, is unless you get the benefits today. And I totally echo what you're saying. I remember in the FAME 2 policy, a lot of benefits were given later, whether in terms of increasing the incentive and all the state governments and even the infrastructure system. If probably it had been done a year or two earlier, the situation is different. So front ending is a very important term. Coming to the Saket, I'm sure there are a lot of learnings. They say when you read Ramayana and Mahabharata, they teach you two things. What are things to do and what are things to avoid? Mahabharata tells you things what to avoid. And Ramayana also tells you what things to do. So if based on your experience, exposure, what are 3-4 things which you must avoid and what are 3-4 things you must do? And they don't need to be very, very complex. They need to be, possible to do.
Sure. So, Arun, I think in the given situation, if you look at the way we all heard yesterday as well as today, there's a huge emphasis on the capital expenditure, which means that there is going to be a lot of boost to the private investment, private consumption. Now, historically also, whenever any kind of a program gets announced by the government, on the ground realities, many often are different from what it gets typically get announced. So in my view, what is really important is to keep a close watch on the project implementation. And I'll give you some statistics which talks about that every 1 crore that the government incurs or puts into capital expenditure, there is a 2.5 times of the production capacity which gets built up, or the production which happens out of it. Now, which means that there is a huge potential for us as an economy to really reach to that $5 trillion economy over by 2025, 2026. But what is really important is to really keep the project management so tight, so airtight, that yes, we are not able, there is no room for us to deviate from the expectations that we have set for ourselves. That's fundamental. And I think all the peripheral announcements which have happened, Arun, you look at the announcements towards facilitating these startups, or towards the education as a sector, or towards making sure that yes, there is adequate amount of remuneration which is given to the farmers. I think those kind of announcements will also go a very long way in terms of implementing this mega, or the so-called in the Amrit Kal in which we are entering into. So I can't really say that what are those 4 things. There are many things, frankly, Arun, which need to be put in place to make sure that yes, it is all implemented right. I think that's largely what, Arun, I would see, from
what you're
an
saying
overall
is
perspective.
Clear goalposts, which is there, right? Seeing it level to level. How
Absolutely.
It's like focusing on enablers, how they're progressing, rather than waiting for the end of the time. And and there's no rocket science in it. So thanks. I think it's been a very good discussion. We've come to it. We have raised, there are a lot of positives which happened. The budget is right in terms of its thought process, long-term approach, but there are still some areas which need to be focused on. We have 3-4 questions, and I'll post these questions to the panelists. The first question is, a gentleman is asking, and this probably is focused on two-wheelers, although nobody is presenting two-wheelers here. He says, if the budget does not simulate sentiment at the bottom of the vehicle buying pyramid, how will supply side intervention help? Because the two-wheelers are still passing through a rough patch. There's no supply constraint. So Ajay, would you like to take this question? Although you present four-wheelers, but you're still part of the OEM. So
Okay, I'll attempt to answer this. So, two-wheeler is a little different ball game. What's happened in two-wheelers is it went through two big cycles. One was, of course, the regulation change, which had a large impact on the capital cost of the two-wheelers. And then the significant change in the commodity prices, which increases the prices of two-wheelers. And this was in a period when, the people in that bracket who used to buy two-wheelers, their incomes were shrinking and their incomes were not going up. So while we had increase in the capital cost of the two-wheelers, the income levels of people were going down, and also rural economy and last couple of years have not been doing that well as it was doing earlier. So I think the combined impact was a sudden contraction in demand, and you saw that happening in two-wheelers. But my guess is that this was this whole aspect of cost increase, etc., with commodities now settling down and prices correcting. Will I think sink in, and as the level of employment generation and income generation goes up, you will see the demand again reviving. So it is a question of demand and supply, which can vary depending on what is the break even for buying a particular asset at an income level. So the moment the income level corrects, and which hopefully it started correcting already in 22, 23 with the background of the budget that you see, and the rural economy also inputs that you see, hopefully things should improve and you should see demand reviving as far as two-wheelers are concerned.
So good, Ajay, what you mentioned was that the input costs or the cost increase in percentage terms on two-wheelers was much higher, whereas the incomes did not keep pace with it, and all the bottlenecks which happened in the economy, whether it was they impacted the smaller town traders or shopkeepers or rural market, but those things are somewhat behind us. They are positive. So it should help. So that's a cry which is there. Second thing, which is a lot of people asking, is there sufficient? One is banks are rich with funds, banks, NBFCs, but is financing happening in an aggressive manner? Because last time in the 2008 subprime crisis, one of the ways the economy really moved out very fast was there was a very aggression given by the government on financing, which is their ownership.
So Arun, if I can answer that.
Yeah.
Because I've been closely involved with this. I think financing is not an issue at all. So financing is available in abundance. The issue is about the credit quality of customers now. So what I think the banks are now doing is that they're very strict on the credit scores of the customers. So if the customer is not qualifying under a particular level of credit score, then it is difficult for him to get funding at, he'll have to go to NBFCs or, other tier at a higher cost. So, now you have marketplaces or platforms where you can actually go and bid for financing for vehicles and so on and get the best rates. So all that's possible, but as long as you are credit worthy. So what really is happening is that if you're not credit worthy or your quality of loan repayment, payment, etc., is not up to mark earlier, then there is a difficulty in getting loans. But banks are gung-ho about financing two-wheelers and four-wheelers as long as the customers are creditworthy. Earlier, there was a little bit of dilution in terms of, taking everybody along and taking a bit of risk, which I think now banks are averse of. Okay, good.
Rajesh, you're there. There's a question which I think you are the best person to answer it. Rajesh Menon is there. I'm not seeing him on the screen. He's there. Okay. The question is that the new initiatives announced, like the PLI, was a very positive initiative. What has been the speed of action there, and when do we see the real benefit of PLI scheme visible, evident in the market? This can be answered by also Mr. Sunil Bora also.
Yeah, I can take that as well. So definitely, I think everybody in the industry is looking forward to the PLI scheme. There have been number of applications. I'm not talking about that in detail, but the expectation is that there might be one more list of components which government will come up before taking a final call on the PLI. And I think this was mentioned by the government in one of the call itself, that they will announce a list of components which will be further added to what currently has been announced. So once they do it, the expectation is by end of March, the entire process of resubmitting the application, assessment, and government issuing the acceptance to the successful people should be over by end of March. And, and that the time window is so small that you actually have no time to breathe. You have to start spending from like day zero.
So, and also the funds will start coming accordingly, also the incentives which are part of it.
Absolutely. I think as Mr. Seth also mentioned, there is no dearth of
no, I'm not talking of. I'm talking of the funds which the government has to give for the PLI incentive. That should also come in.
So that won't come immediately. So that is, so you have to complete a year cycle. Then based on your revenue, it's a percentage which is casted out. So you actually will get amount maybe after 18 months, something like that.
So, but you can measure it. You can clearly know where you stand and how much you will be getting.
Absolutely. Yeah.
So, we're coming to the end of the thing. We just, so thanks for all very insightful discussion. I think 2-3 key things came out. Everybody felt that the budget had the heart. The budget had the right points there focused. Political expediency didn't guide it. Country's progress guided it a lot. A lot of people thought that since elections are around the corner, political expediency will be guiding it. And there are a lot of steps which are in the positive direction, which are there. And this focus on capital expenditure, focus on digitization, focus on education, all are positive. But one also hears that certain areas, R&D was one theme which came across. It should not be left on side, because otherwise we'll get to the same problem when we reach the 95% of indigenization and we're back to 85% indigenization. So R&D has to play, innovation has to play an important role. And what Ms. Saket mentioned and even Ajay mentioned is, how do you keep monitoring at every stage that the announcements you have made should actually start delivering. If you don't monitor them at the 2 years down the line, it may not get the real benefit. And in order to avoid transmission losses, and as Saket mentioned, is look at it from the global, because global, global actions are also impacting our economy, whether it's the Fed rates, whether it is the oil prices, whether there are other things. And even we look at a stock market, what happens in Tokyo in the morning impact our stock market in the afternoon. So these are things kept in mind, but there's a very thought out logical approach. So thanks all the panelists for such an insightful discussion, and thanks also for the audience.